This video is brought to you by Blue Guardian. All right, folks, here we are in Trading Up. We've got Ethan Garland in the house. We've done an awesome podcast. You've got to go and check it out, man. This guy is funded to over 600K. He's going to show you his 1-minute trading strategy, the strategy that you use on these funded accounts in a second. So let's welcome you back to the show, Ethan, and then share your screen.
Right. So yeah, basically I'm going to show my full 1-minute strategy. It's all like fully mechanical and rules based. Like I said in our podcast, basically I use a little bit of discretion in my own personal trading with these rules in terms of going break even and those kinds of things. But if you follow these rules, you will be profitable. And it's like I say, it's like literally just follow the rules and it works. It just takes a discipline to follow them.
Yeah, I suppose we should say that it is an ICT smart money concept based strategy. So if you are into that sort of stuff, this might give you some further insight on what to do. So let's share your screen and take a look. Folks, before we jump into the strategy, I do want to remind you, you've got a chance to win one of 3 $50,000 evaluations with my sponsor, Blue Guardian, and the firm that funds Ethan. To do that, there's a link under the video where you can fill in the form and enter. Now, remember, it does run out at the end of the week, so you've got to be fast. All right, folks, let's get on with it. Our sponsor, Blue Guardian, is the only prop firm that gives their traders a built-in tool to protect them from hitting their max daily loss and overtrading. It's super simple to use. Just set the Guardian Protector each day from your dashboard. Did you also know their evaluations are 40 and 80 days long, giving you plenty of time to hit their low 8 and 4% targets? Check out the link and coupon in the description to get 10% off your next Blue Guardian evaluation.
This is basically everything. We were just talking about it and saying like, literally, people give away everything for free on the internet, and some people just don't take it and make it work for them. They want to rather pay for stuff that is available for free anyway. But basically, the rules are easy. It's 5 rules, and you literally follow these rules and just be disciplined about it, and you will be profitable. So basically, we trade between 8:30 and 11 a.m. That's UTC -4, so New York time. So you change your time zone to New York time. Pretty important. I've also got this indicator which shows this blue area. That is my trade time. This before that is the second rule. This gray part is the Asian time, which is between midnight and 8:30 a.m. So we've got this area here, which I simply use this. I use this indicator. Let's get out of the stock screener. So I use this indicator to show my Asian time, which is set under London, and New York is that, and then I just change the colors. So basically we mark out the highest and lowest point. So for example, we would be looking at the lowest point. The lowest point in this example would be right here in this gray zone. So that is your lowest point. And then the highest point would be right here. And so then we wait for the sweep of one of those points. We can see here that price swept and reacted. Okay. And then we would be looking to enter on the fair value gap once price has shifted structure, which is rule number 4. And then we target 1-to-2 risk reward ratio. So I'm going to go over a few examples. These examples are all in succession. So this is basically the last 3 or 4 days of data. So all these trades take place on the 1 minute. You can use lower time frames for it, but I prefer the you can use higher time frames, but I use the 1 minute. So basically we're looking for the lowest point, which would be this point here. Okay, and we can see price swept, and we would be looking for a change of character. Okay, now here are the different various pullbacks. The best one would be this right here, because you can see that it continues to make lower, lower, lower. You could also have said this, technically, this would have been fine as well. Okay, because you can see there's a big extension to the upside. So that's your displacement. ICT likes to talk about that, but basically it broke structure and broke structure here. you can see here there were no significant structural shifts. And the way that I also basically classify these is that we can only confirm the high once the lows have broken. So once this part here is broken, this is now a high, and this is the high that needs to be broken. Price then pulls back, okay, and then it goes down, breaks, okay, and we continue down like so. So this is the point. This is the point that I wanted to be broken. It got broken, and so I will look for the fair value gap, which will be right here. Okay, and a lot of people ask, why don't you go for the fair value gap that is right here? And that's because we want to go for the one that's at the extremity. So the one that's furthest away, that is the one that we go for. So you can add that into the rules. I usually do, but we go for the fair value gap that's furthest away. And then we hop in, and I like to cover the lows. So personally, I would have my stop loss here, and we would target 1 to 2. Okay, so let's see. This gets tagged in. And once we get to 11 o'clock, then the trade's done, trading day is done. Okay, so this particular trade does not tag us in. 11 o'clock comes. So let's go on to the next day. I think it still works out anyway. Let's skip over. Sorry, there's no way to.
Yeah, it's all right. It's all right.
You'll have to just.
1 minute's a
edit
bit of a
this
pain as
out.
well. Yeah, we will.
Okay. Okay, then we go on to the next day of data. So we look at the highest point, which would be this point here in our gray Asian zone. And then we can see that price liquidates that high. And now we're looking for price to shift. So I would like price to break here, for example, before I start to look for entries. And obviously there must be, and right now it'll be this zone here. And now it'll be this zone here. Okay, so price has broken right here. And I will hop in gladly at this point if price comes back for me. So we would hop in right here, and I like to give about a pip of breathing room at the top. And we're targeting 1 to 2. The reason I like this as well is because there is a really large imbalance here that will most likely want to get filled as well. So that's quite nice. Let's see if we get tagged in. Get tagged in. And that hits us for 1 to 2. You could have also gone break even at 1 to 1 as well with this one, and it still would have worked. So in terms of my back testing, we could have recorded that as, we went break even at 1 to 1, and we still hit TP2, well, the full TP. And then let's go have a look at the next day. Okay. Now here, we've got this up here, and we got this up down here. So we're waiting for one of these to get swept. And the lows get swept. Quite a nice little reaction as well. If price breaks this area, I will get long. Okay, it does not. So now I'd be looking for price to break this area. And now I would be looking at this area. Okay, so it broke. And we've got the fair value gap right here. By the looks of it, we would have already been tagged in. I just clicked forward a few too many times. Give it a pip of breathing space. And then we target 1 to 2. And that would have hit 1 to 2 risk reward. As you can see, we entered in our session. So if I enter in the session, I will just let it run. And obviously, if it starts to go out of session, I like to go break even as well, but we still would have hit TP2. So yeah, so that's 2 examples of winners. We've got this one that didn't tag us in. Shall we do one more?
Yeah, why not? Let's do one more. We'll do one more.
Okay. Yeah. Up to the 1 minute. So you can see it's the same thing every single time. There's a few little, there's a few things that you need to practice, such as like your changes of character points. But eventually you get used to it, and eventually it becomes second nature. And then, but it's very, very much the same thing every single day. So this is now sweeping, which would have been that point there in the gray. Now let's see. I would be looking for price to sweep. Let's see. This area. Okay, so price swept. We would be hopping in right here. However, one thing I need to note, you can see we're getting in very far up this leg of price. So if we drew like a Fibonacci, you would see the 50% isn't really in our favor. So this would be discount price, and we're now hitting in a price that is not discounted. So if you learned anything in terms of, if you've gone through ICT's mentorship and those kinds of things, you would have known that it's not an ideal place to get in, but we can get in anyway because that's the rules that we've got set out. I'll cover this because we can cover that. Let's cover the lows because we're still at 10 pips. And we're looking for 1 to 2. That being said, this would be classed as a much lower probability trade, just purely because we're getting in at a point that is not discounted. So this is an example of a loss trade. Let's see if so yeah, it ends up going lower. So there we go. We got one that didn't tag us in, 2 wins, and this is our loss. So with a 1 to 2 risk reward ratio, if you continue to backtest this, you'll see that you do end up making really, really good profit. And once you add in that additional, you add in the addition of experience and a bit of discretion. For example, like what I just showed there, you can add in extra rules where you want to get in on a discounted price versus getting in at the top of a leg like I did there. So once you get the experience and you add rules that firstly work around your lifestyle, but also around your risk management style, which is different for everybody depending on their psychology, you can really create a system that works really well. And what I mean by that is, when it comes to people's psychology, some people want to go break even at 1-to-1 every time. Some people just want to let it run. Other people like to protect their stops early. It's all down to them. And some people want to have even tighter stops. And so you can factor that into making the strategy your own, but you can also just steal mine and use it. And I've tested it and it works and it's profitable. So that's the beauty of this.
Awesome.
All right, folks, I'm here at Black Bull Markets headquarters in Auckland, New Zealand. You can see this amazing view behind me of Auckland Harbour. Now, talking about views, if you do want to get free TradingView Pro, then all you need to do is trade one lot a month at Black Bull Markets, and they're going to give you free TradingView Pro. So, folks, to find out more, click the link in the description below or the card above.
Well, look, thank you very much for sharing this, Ethan. It was absolutely fantastic to see how it works. Folks, we did shoot a podcast before this. You've got to go and check it out. So you're going to get Ethan's full story and a whole bunch of tips and insights into all sorts of things. But before you wrap up, what's the best way for traders to get hold of you?
The best way to get hold of me is on Instagram. It is garland.trader.
Brilliant, folks. And that'll be in the show notes as well. So while you're clicking down there, hit subscribe, like, and that notifications bell, click all, and we'll see you in the next video. Tired of missing trades or spending hours at the charts? Introducing my Robot Builders Club. With our platform, you can build bots in minutes, not weeks, without any coding required. Get lifetime access to my video course, VIP community, and over 40 ready-made robots. Works with MT4 or MT5, and as a bonus, you'll get 3 months access to my robot lab, where we build and test bots on live calls every week. Join the hundreds of traders who are trading smarter, not harder. Click the link in the description to learn more, get the free training, and download a free robot.